happy Red Friday, Facebook. Well, I guess you guys are seeing us on Facebook, of course, but Low VA Rates Nation. It's Maurice again, your favorite loan officer. It's good to be back. Hope you're enjoying this Red Friday. Remember red, we all wear red here at Low VA Rates. Why? R-E-D is remember everyone deployed. So we'd like to just to give a shout out to all our military service members who are out there, especially during this time of year, and especially you families who are here, you know, not having your loved ones with you. But we appreciate what you do. This is why we do what we do here. This is why I love working with veterans. So thanks for being with us today. And before I forget, just in case in the end, happy holidays too. I hope you're all enjoying and being safe during the holiday season. So today's topic, we're talking about what is an earnest money deposit. Okay. Now this is something that comes into play specifically with purchases. Okay. So let's back up just a little bit. Okay, you've already gone to your loan officer here at Low VA Rates. You've got a pre-approval or a pre-qualification letter. You've got a house now. You're trying to get a house under contract. Okay, you've got a real estate agent, and you're shopping around. Well, the seller says, "Hey, I will accept your offer, but we're going to need about $1,000 earnest money deposit." What's that? In simple terms, it's sort of like a good faith, deposit. Basically, the seller is saying, "I will take your offer if you will put some earnest money down." Okay, so usually there's no set amount. It can be the usual number is about 1 to 2% of the purchase price, but it can be anything. It could be $250, it could be $10,000. But that is how the seller will seriously consider your offer, because think of it from their perspective. They could be getting offers from 10 different people. But how about we narrow it down by, let's see who is really, really willing to get serious about this. Okay, well, 5 of those are willing to put an earnest money deposit. Okay, now it makes it a little easier for the seller. And so the earnest money is sort of to secure the contract. In other words, the seller will take their house off the market and they will let you do your thing so you can close on the loans, giving the lender the time, get the appraisal, the inspections, and so forth. Okay? And you're thinking, well, I'm a veteran. The VA says no down payment. That's true. The VA does not require the down payment, but a seller may require some earnest money. Again, that's between you and the seller. You may find houses without putting any earnest money. So that is something to consider. So what is that earnest money used for? Well, it's put into an account, and it gives you time to go through the inspections, appraisal, get the house underwritten, and the property, and the whole loan underwritten by your lender, and hopefully close, right? And that money can actually be applied to closing costs. So it's not like you just gave $1,000 to the seller. It's that money can be used to cover any closing costs that you're responsible for. Okay. So how much should you offer? Well, that's between you, your agent, and the seller. Sometimes you want to offer enough to secure, maybe beat out the other offers. Let's say you're all trying to buy a house, a $200,000 house. You're all offering $200,000, but the other guys are offering $500 in earnest money, but you offer $1,000. That may tip it in your favor in the seller's eyes. Okay, so you want to be smart about it. Now, here's the catch though. It can be at risk. Doesn't mean that it's refundable. There will be contingencies in place in the contract to protect you, but you got to be careful with it because it can be at risk. For example, let's say it's January 1st and the contract deadline is January 30th, but your earnest money deposit goes hard, is what they call it, meaning you can't get it back on January 15th. So you probably want to get a lot of the inspections done before that. Check with your lender, hey, how are we looking? Because after this date, I can't get my earnest money back. And so you do want to make sure you're following the contingencies. Now, if the seller decides to pull the house off the market and no longer sell it to you or things like that, you should be able to get your earnest money back. But you want to make sure you review your contract, make sure you're getting all those things taken care of in a timely manner. And so if your loan officer is saying, hey, I need these documents, but I need this, there's a reason why. We got to meet certain deadlines, okay? So that is earnest money. Okay, again, if you have any questions, please post them. Or do we have any questions right now?
Terry Burridge would like to know, is earnest money a percentage or a set dollar amount?
It can be either one. So the question was, in case you didn't hear, is earnest money a set amount or can it be a percentage? It's up to what you negotiate with the seller. Really, the seller will decide. It's very common for it to be 1 to 2%. But honestly, if they're not getting many offers, sometimes they're happy with something. But yeah, that's a great question, Jay. Anything else? Okay. Well, if you have any questions after this this session here, post them. We've got a great team here. Either they or I will answer those questions. But like I said before, we love working with you. Always ask for Maurice Navarro, your favorite loan officer. Happy holidays and have a great weekend.